hangouts. And just a quick note to all of the reporters here. If you want to come and chat about our future events, I'm going to be here for another hour.
Hello. Right, Alex has kindly introduced us all. So I thought we'd start off with a bit of audience participation. And I wanted to ask, who here owns property in the Bay Area? Who's renting? Who wishes they could own property in the Bay Area? Who thinks they never will own property in the Bay Area? Good to know. We've got a diverse crowd. So I think the best thing to kick off with is to talk a bit about the companies that are actually supposedly IPOing this year. So we've got Uber, Lyft, Airbnb, Palantir, Postmates, I think I'm probably missing a few, Slack.
Pinterest, yeah.
Pinterest, excellent. Yeah, so as we heard, huge amount of cash is going to be flooding onto the market, so they say. But Anthemus, I feel like you could tell us a little bit about what's going on behind the scenes. Like, will we actually see some of that money anytime soon? What's happening with kind of employee lockdowns?
Yep.
And what the reality is in terms of the money actually flowing out.
Anthemus CEO Zampa, another Brit, so we're back. Yeah. We're not.
You guys love their accents or what?
Yeah. It wears off. You get like 2 minutes grace, and then you'll realize we're not that clever at all. Wait till we'll be back to So, the common thesis is employee kind of liquidation happens 180 days after the IPO. That's when you're allowed to sell your shares. So most people say that's when liquidity comes to market, that's when the house price kind of kickoff happens. It's actually not what happens, and you heard a little bit about it in the previous talk. If you look at the studies, I think UCLA just did a study on this, and they found that the biggest upticks in house prices happen the day of filing, and they also happen the day of IPO. So they showed that people aren't buying houses on the basis of their liquidity, they're buying houses on the basis of their supposed wealth, even if it isn't yet liquid. There was one other study that's interesting that Zillow did, which was after Facebook's IPO, which is obviously the landmark IPO of the last decade. House prices in Menlo went up 21% within a 30-minute commute to Facebook, 21% in the first 12 months after Facebook's IPO. The rest of the market was up in the teens. And so there is a significant feeling, there's a significant reality to this. And so, yes, employees don't get to sell immediately. Most employees are locked up for 180 days after the day of the IPO, meaning they're not sitting on a mountain of cash. But there are a lot of lenders in San Francisco who are used to this, who are prepared to lend against that. And so I think to the previous speaker's point, kind of the bump will either happen soon on the day they go public, or it will potentially happen 2 years after they get liquidity and they've kind of considered their options. Actually, the day of 180 days in isn't actually when there's a bump, and actually the data shows there's no bump on the liquidation or the day they can actually sell shares. So to echo the point, I'm no real estate expert on when or not to buy, but now is an interesting period if you believe that thesis before these people actually do hit the public markets. It is a unique point in time right now.
In terms of the names that we've got, does it make any difference? I'm going to come to you, Matt, about which company goes first. Do you have any, can you speculate on who you think may be going first and what effect that will have?
Yeah, I'd like to throw out a point. I mean, from the previous speaker, which was, it was a great talk. One of the theses that I want to challenge a little bit is that the venture capital valuation is actually the basis. I think we actually pay through the nose for our startups. And I think a lot of these companies aren't going to price at the venture valuation, but they may fall a little bit lower. And Square is kind of a prime example of that. If you look back when Square IPO'd in 2015, IPO'd at about $12.85, held at that price point for 2 years, right, all the way through 2017, and then started gradually increasing. And 2018 was its best year ever. It's now at, I think, 77 a share when it closed. And so I think the public markets are actually a down round for a lot of these companies. But there's a lot of hype and speculation built in here. Who's going to go first? Is it going to be Lyft? Is it going to be Uber? Lyft, filed its paperwork the day before Uber did. Lyft also only has a small portion of the market in comparison to Uber, right? It's a lot less. There was an article that just published by The Information before we got up on here that was saying that Uber and Lyft now are actually discounting rides. So us, the consumers, are going to take advantage of them trying to get higher growth rates into their IPO and falsely drive their numbers up. So I think there's a lot of benefits across the board. But if you look back at last year, there were 190 IPOs, which raised about $47 billion, right? And then the year before that was 160, the year before that was 105. So there's going to be a ton of IPOs, right? There's also ones that are outside of the tech industry that will actually positively impact, like Levi's, for example, right? That's going to be a great IPO. That company's been private for a long time. So I think overall, tech or not tech, IPOs bring good liquidity into the market. As a venture investor, we love IPOs because we're sitting on these 10-year cycles within a fund, and without an IPO or without an exit, there's no venture capital, right? So we need this.
Yeah. And do you think there's, in terms of kind of a hype and Timeframe and new ways of, take Slack. So they're kind of doing an interesting IPO. Can you tell us a little bit more about that and how that kind of won't?
Yeah, so Slack and Airbnb both are considering a direct listing model, like what Spotify did. Yeah. It basically takes the investment bankers out of the equation, and they do a listing, but they don't sell any new shares necessarily. So it gives the existing employees the chance to sell their stock, but there's also some challenge in where you price it. Right, so Slack is kind of stepping back a little. Airbnb is as well. We'll see what happens. It's a new form of going public. It takes a lot of the BS out of the equation, but also takes a lot of money out of the bankers' pockets, which buy a lot of those nice houses in Pacific Heights.
And Murray, what do you think about? Is it hype? Is it real?
Let me share a funny story, which I think is beneficial for everybody. So back when the little company Facebook IPO, guess what I did? I was working at a small boutique company. So I was like, oh man, all these guys are going to be gazillionaires overnight, right? I didn't know how this whole process works. So I went and I made 250 handwritten envelope, beautiful letters that I wrote out and took me hours to do. Broke into the Facebook campus and just literally started putting these on people's windows and their cars. Right? So then the security comes and I almost get arrested that day. What are you doing here? It's private property and all that stuff. Because myself, and I think a lot of the people, who here is a realtor here? Just raise your hand. There's a lot of realtors here. So look, for all of us, this is a super beneficial time. To be able to take advantage of the amount of wealth that is going to happen over the next 24 months. If you're here, if you're a career-based realtor and you're here for the long run anyway, just keep trucking along doing what you're doing. When the money hits, if you add strategic positioning of being in the right place at the right time, being able to add value, and also to be able to show your skill set for a lot of the people that are going to be coming into this money, that's when you're going to be able to get the business. That's how it's going to translate. So is it hype? Yeah, of course it's hype. Right? He just said 190 IPOs happened last year and 104 the year before. How come nobody was here during any of those IPOs? And it just happens, that 5 or 6 of them are going to happen over the next 12, 24 months, and now all of a sudden, everyone's going to be, super wealthy and spending all their money here. And I can honestly guarantee you they're not going to be spending it in San Francisco. There's so many places in the San Francisco Bay Area and throughout all of California and, North Tahoe and all these places that people are going to be spending money at. So I can tell you this, if my client says, hey, I'm going to buy a $9 million house in Pacific Heights, I'm going to say, you're an idiot. I'm going to say, no, you're going to spend $3 million in San Francisco, you're going to buy a $3 million house in Maui, and you're going to buy a $3 million house in North Tahoe, and I'm going to help you with all of them. So that depends how you're going to be able to facilitate and help your clients. Now, it's something that you should definitely take into consideration. Desmond just had a great presentation where I saw a lot of bubbles that said only 40 employees out of Facebook bought in San Francisco. I don't know where you get these numbers or how do we know who works for what, but I'm like, wow, that's a pretty small amount of people. Facebook is 7,000 people now, guys? Yeah, more than 7,000 people. So you're telling me only 40 could buy in San Francisco? That's, I don't know, for me, I don't know, that seems like a skewed number, but then again also, it may be just that they're not all buying in San Francisco, they're buying in many different areas. So, of course I think it's hype, but take advantage of it.
It's an interesting point because if you look at the demographic of the people who will have this cash, what are they looking for? Do they want to buy here, or are they starting to think about settling down, having a family? How many people want to stay here when they've got 2 kids and they're thinking about schools?
Yeah, I mean, when we talk to employees or we see this elsewhere, a lot of people might cut and run. You look at those surveys that say 40% of people want to leave the Bay Area in the next 2 to 3 years, and we've heard that for a while. But this is the first test of that, because they're actually going to liquidate their shares, and they actually can cut and run. But before they couldn't actually liquidate. And so this is the first test of whether Denver, Salt Lake City, SoCal are actually going to be, to your point, Austin huge. Yep. This is actually going to be an exodus, and it's not going to be dramatic. There's still so many people that are moving to the Bay Area that will top it up. But in terms of the housing market, it is not a layup that people are going to buy here. And then obviously as Zampa CEO, we obviously just focus on rentals. There is a continued shift away from ownership in terms of what people value in their life. We survey people once a year about, is it part of the American dream to own a house? And 1 in 3 people now say it isn't in the Zampa surveys. And this is 10,000 people we survey every year, up from 29% 2 years ago up to 33% now. So it's not going to change tomorrow. But when you think about what people want to spend, the person who makes $2 million from the Slack IPO, do they want to buy a house? Is that the thing that's most important to them, or do they want to spend it on experiences or stay footloose so they're not stuck in San Francisco for forever? And the biggest predictor of that is the age of marriage. North Americans, same with our Brits, we all get married 10 years later than we did 50 years ago. And that is a gigantic, as you guys all know, demographic shift away from buying a home in your 20s to buying a home in your mid to late 30s potentially. And a lot of those people who are going to get liquidity are single, living the dream in San Francisco, and buying a condo in the dog patch might not be the first thing they think of. And so that's the contrarian view, is that there's a lot of liquidity that's absolutely going to rub off on the Bay Area. It's implausible to think it won't have an upward effect, but the contrarian view to the slides that came before is that not all that money is going to be spent on real estate in San Francisco, and not all that money is going to be spent on real estate. And that is probably the first time we think that may happen. And so from a rental perspective, we think the luxury end of the market is going to get super interesting in the next 2 years. May not affect the rest as much.
That said though, are you getting calls at the moment from people who are thinking along these lines, and what are you telling them? And are there particular areas, are people looking at where these companies are located and trying to buy up kind of rental properties around there? What's happening? And is that a risk, or is that a smart move?
No, so I can tell you, we've helped people that worked at Facebook, Twitter, and Square from these past IPOs that have happened. So I concur with this gentleman here, 150 million %. The average age for people that are settling down and planning roots and having kids and doing that whole 9 is 39 years old now.
Yep.
So you just have to put yourself in these people's shoes, okay? You've been working super hard for 5-6 years. Everything that you wanted to do, all of a sudden now you come into this massive amount of wealth. The first thing that these people are going to do is go travel. They're going to take sabbatical. They're going to travel, because think about it. A lot of people that have the technology skills can work from anywhere in the world. They can code from anywhere. It's going to happen. So they're going to take off. They're going to live in Manhattan. They're going to live in Austin. They're going to live in Seattle. They're going to live in all these different places before they finally settle down somewhere and actually buy. I think a lot of the people could attest that there's a commitment phobia, I guess, with buying a home. It's really it's interesting, because now you're planning routes. You have to stay there, and it feels like you have to build the whole life there. Whereas, it's not really like that. But for what we've seen and what we've been consulting on lately is, okay, this thing is going to happen, right? Many of the people that this is going to happen to, they have no idea what's to come. They don't know how the stock options are going to work. They don't know how the vested options are going to work. They don't know when the time is going to be released. They don't have a CPA. They don't have an estate attorney. They don't have a financial planner and wealth manager. They have nothing related to the team in place for people to move forward with potentially taking $3 million and saying, hey, I want to spend it on this specific asset, right? So in this time right now, all we're doing is consulting on, okay, what is your life going to look like in the next 24 months? If you catch them early, every single one of you guys are advisors for your clients, you catch them early and you explain to them how is this process going to work, so when the time comes for them to either buy their first home or second or third, you're in the right position where you've added value for the last 24 months instead of the Pop-Tart like me showing up at Facebook and saying, hey, I want to sell you a house. So it's about really adding value for the next 24 and 36 months in order for someone to actually want to be able to trust you enough to work with you. So it's going to be interesting to see who survives.
What are your thoughts on, so if someone was to buy a property with the thought that they'd be selling on to someone, maybe an international, someone like myself who never been to the Bay Area, understands that it's like a hot place to buy up, arrives, I think we've discussed this before, kind of things that we've become accustomed to, the homelessness, the human feces on the street. You're seeing people who come here, they're looking around and thinking, oh my God, why would I pay that amount for this area? It's dirty and I'm concerned and I feel like it's dangerous. Are you seeing that a lot?
150%.
Yeah.
Absolutely. I just had clients that came in from two different places, a group that came in from Dubai and also a group that came in from Melbourne, from Australia. Obviously, San Francisco is a cosmopolitan, the most beautiful city ever, but if you make a left turn and you start going through the Tenderloin, it's not so tender, right? So they saw things that they've never ever seen before. So it is really hard for someone to justify spending $5 million on an asset here in San Francisco when they've seen that aspect of it. Obviously, they haven't been to the Cow Hollow and the Noe Valley and all these different places, but when they think San Francisco, they think Union Square, you guys. They think the Port of San Francisco, that's what they're thinking about. They're thinking the bridge, they're thinking Alcatraz. They're not thinking, hey, let me go and look at the demographics of every single one of these neighborhoods and understand them inside out and figure out what liquefaction is and all this type of stuff. So for people that are from international places that are looking to buy that, what I've seen and experienced, they want something brand new, condos that they could just rent out. So will that continue on for a safe haven for people to park their money? I think so, because he's in business because all these people keep renting them. So it's going to happen. It's going to continue. They're going to continue parking their money here, places like Manhattan, South Florida, and the list goes on and on. But San Francisco has its problems, and I hope over time, they start thinking about how to really, really solve them instead of brushing them under the rug. Because there's a lot of people moving out of the city every single day because of these problems. So.
And going back, because I think we touched on it, but it's worth kind of digging out a bit more. In terms of the time frame, so we've got this idea that now is the time to sell, but there are some setbacks happening. People are a bit scared to go first. We have the government shutdown, which kind of stalled paperwork. What do you really think is going to happen? I mean, is this going to be the banner year of tech IPOs, or are we going to be waiting a bit longer than what we thought?
I mean, it really depends on what happens in the macro economy, right? I mean, if things aren't looking good and interest rates keep rising, Uber may delay, right? They've already delayed for a while. The government shutdown stopped the process for a couple months as well. So there's no guarantees whatsoever that these IPOs are going to happen. But Uber does need more capital, right? And raising public capital is far easier than raising private capital at the levels they need, right? They've already exhausted SoftBank. And so they need more capital in other ways. And so it has to happen. When is it going to happen? Most likely this year, right?
I think the fear is, imagine Uber went south. Imagine they went public. The market sustained the price for 3 weeks, and then they ate it at the end of the first month. Can you imagine the knock-on effect of a marquee IPO like Uber going south? It would be the trigger. It could trigger the next bust. And so what is a really optimistic time is also a very fragile time, because one or two of these, but especially Uber, because it is so marquee. If that went south and the public markets would not sustain the private valuation that is being propped up by late stage growth investors, which is why these companies didn't go public for so long. Just to name two companies that you guys all know backwards, Zillow and Trulia, I was just talking about this morning, they went public on $30 million of net revenue. $30 million. Like Uber's going to go public on billions of dollars because the private stage capital has valued these guys higher than the public markets would, so they held off. Now the test is, do the public markets bridge that gap? And if they don't, it could be bad. Now, I think it'll be okay. I'm optimistic, but it is, what is exciting is also deeply risky. And to your point, if Uber goes early and doesn't go well, it will definitely have a knock-on effect on the ones that follow.
I think Lyft's going to go first, but just saying.
Yeah, I agree. I think they have to go first.
Yeah,
Lyft,
they have to, yeah.
And why do you say that?
The contrarian play. I think if Uber went first, Lyft will seem very small, but if Lyft go first as a rideshare, it's the right bet, yeah.
Well, I think, should we have some final thoughts on Let's Go? So is it hype, or should we be buying up now? I say we. I would definitely not be buying anything.
So-
people here be buying.
As my agent always tells me, it's never a bad time to buy. You should always buy now. So,
Is your agent peasant?
no. But yeah, I mean, if you want to buy a home now, right? There's never a bad time to buy. The markets have been going up. We're in a very interesting place here. And it's always good to be a seller right now too. So,
With the caveats, buy now. I just made an investment in the dog patch, which I think is going to be an amazing area for the next 5 years, and I rent it out on Zumba.
Is that where Uber's
Uber's going there, the Warriors Stadium opens, and even though it's kind of priced, it's not priced till people go to their first game, and the dog patch is going to change a lot in the next 5 years, and it's priced at under $1,000 a square foot, which anywhere else in the US is super expensive, but in the Bay Area it's kind of cheap. So I actually just put my money where my mouth was, so I bought in the dog patch and I'm renting it out, and I think we'll see big rental yields in the next few years. That's the bet.
I think we are in the most opportune place ever. Everyone from across the entire globe wants to live here in the San Francisco Bay Area. So if you're going to be buying in Danville, Alamo, San Ramon, Moraga, Orinda, Berkeley, San Francisco, Palo Alto, Marin County, like, look at the statistical history of the 10-year, period. Anywhere where you put your money in 10 years ago, you're going to make a good amount of money in the San Francisco Bay Area. It's a safe bet. I would 150% say, look, if you're ready to plant the roots, if you want to actually let your money work for you while you're doing nothing but just enjoying this beautiful house, yeah, of course, buy something and let your money work for you. This is how more people have become millionaires, more than the tech money, more than the stock market, more than anything else. Like, real estate creates millionaires. So if you would have bought something with me in 2012, you would have over doubled your money in San Francisco. Over doubled by doing what? Just literally enjoying it and having your food delivered by DoorDash. It's crazy. So yes, this is a fantastic place to buy. If you want to do it, absolutely do it now. The market's been shifting for the last 6 months straight. No more multiple offers, price slashes, unbelievable. So this is a fantastic time for you to be able to put your money in something that actually is valued right now, whereas before it was escalated value that didn't make sense, but now's a good time. And if you want to speak to me, I'll be here afterwards.
I actually have one before I go to the floor for questions. I'm really intrigued to know, right, what was the kind of flashiest pad that you've sold in the Bay Area, and can you tell us who it was to?
I can't tell you who it was to, but I'm on an NDA for that. But it's, believe it or not, it was a beautiful property in Hillsborough. And it was on a 1.5 acre flat parcel. So in Hillsborough, which is in San Mateo County, there's not much on the flats over there. So this person was someone that really wanted a huge amount of land, and it had every single bell and whistle you could think of. The house is drop dead gorgeous, but yeah, the person that bought it was actually from, believe it or not, from Texas. So it's really interesting to see where these people are coming from, but like I said, everybody wants to be here. This is the place. He moved all the way from London.
Correct, yeah. Yeah.
Trying to batter someone. Right, any questions?
I'm curious, because you guys talked about the exodus out of the Bay Area and prices continuing to be steady and or rising. as people, sort of we say it's a safe bet, and I agree with what you're saying. How does this affect the rental market? Because from what I've been seeing, it seems like the gap between Manhattan and San Francisco continues to grow, and they're going in the wrong direction or going in the right direction. So I almost think it's never a bad time to buy in the sense that you could leave anytime you wanted as long as the rental market continues the way it's going. So I'm curious to hear your thoughts on that.
And specifically on the future of the rental market here?
Yeah.
Yeah, so San Francisco median one-bedroom rent is around $3,400 according to Zumpa's prices. Manhattan's actually like $2,750 now. So Manhattan's actually come down below 3,000 this year for the first time in a while. So the supply-demand dynamics that we've discussed about why the Bay Area real estate is so pressured upwards continue to kind of be true. In terms of the rental market we've seen here, we've studied the data. Actually, the only trends we can see in IPOs is on the luxury market. We wanted to come up with clever findings on like the mid-market after a Facebook or whatever IPO. When you think about the Nemas of the world and like the multi-family buildings in Soma that are making a big bet on harnessing those Uber employees who want to live near work, and they're charging like $5K for a one-bed apartment that's like 400 square foot. That's the, and they're getting it, and they're clients of ours and we love them. But they're creative marketers, yeah. They're getting it, and I think the rental expectation we have is, I think on the luxury end, it will continue. And then back to my original point on the radius. On a micro level, if you're buying an income rental property, if you can buy near an HQ, so like you were saying, near Uber in the dog patch, or where Dropbox is moving, or some of these people are moving, there's the laziness factor. If you can walk to work, there's just a premium that would put you into the premium thing. So actually, San Francisco is kind of flat. We've seen it come down at the luxury end in the last few months. I think there'll be upward pressure on that, but the rest of San Francisco is settling a little bit.
When you say luxury, is that 5,000 in that?
Yeah, I'd say for one bedroom, it's crazy to say this, but like 4.5K and above is pretty luxury for a one bed. That's insane. That's a ridiculous statement. I mean, I say that in any other market and they'll throw stuff at me, but you guys know that's true in San Francisco.
Thank you.
We love your maps.
The maps, great. We should charge for those, but they're good.